welcome to The Trade. Before we get into the charts, let's have a quick look at what traders are watching. President Trump saying that the US should take over Greenland. He's doubling down there. Leaders from the semi-autonomous Danish territory criticising a planned trip there this week by a high-profile US delegation. President Trump, meanwhile, has issued an executive order declaring that any country buying oil or gas from Venezuela will pay a 25% tariff on trades with the US, while his administration extended a deadline for US producer Chevron. Trump also saying automobile tariffs coming soon, even as he indicated that not all of his threatened levies will be imposed on the 2nd of April, and some countries may get breaks. While Russian and US officials have wrapped up day-long talks focused on a narrow proposal for a ceasefire at sea between Kiev and Moscow, part of a diplomatic effort that Washington hopes will help pave the way for broader peace negotiations. Let's get into the technicals now. I'm joined by Peter McGuire from trading.com. Good to see you, Pete. Now, we're continuing to watch here what's happening with gold and, of course, the records that are being hit above $3,000 an ounce still.
Absolutely. Good morning, Juliet. I tell you what, and when you listen to what you have just introduced as far as President Trump and the impact that that's having to markets and what that does to sentiment and confidence, and building on what your previous guest said, it really, I think, underpins what we've seen as far as gold. And, we hit that all-time high of 3,057. It'll find support probably around that 3,000 number. It's back in a little bit of a pullback at the moment, running, the best part of about 3,015. So I think the overall momentum, a little bit of that hot air's coming out. We're waiting to see what happens as far as the drop with April 2 with President Trump and the renegotiation of possibly some of those tariffs. So that seems to be the issue at hand, and whether we're going to see a further sell-off, Juliet, to that 29.30, 29.50 sort of handle, or the current uptrend does continue. So, there's many components to this, and you can't take your eye off the US dollar either, nor equity markets, and of course what happens with the VIX.
Absolutely. Well, let's just bring up the gold chart so we can point to some of those technicals that you are looking at there. What is sort of the key point we should be looking at here, Pete?
Well, if it breaks that 3,000, I think that's where we're going to look at from a constraining line. The 29.93 sort of handle is where the bears could push it lower. 29.30 to 29.50 is certainly a bit of a danger zone. And that 20-day simple moving average, tentative support trend lines, as far as how they're positioned, to break below this level could weaken the short-term outlook and, likely trigger further sell-off. So that 28.75 handle, and then if that's for the downside, Juliet, and then you've got to look at the upside. Think about 3,067, maybe bringing 3,100 as the next line in the sand, and a continuation higher could challenge that 261.8 Fibonacci extension to 3,155. So it's one that you can't take lightly, because of what we've experienced over the last 18 months has just been mind-blowing as far as gold price appreciation.
Absolutely. Also, as we continue to focus on what the president is doing, a lot of focus on the dollar. What are we seeing with dollar yen in particular?
Well, that's an interesting one. You're now broken 150, which we didn't expect that to happen so quickly or violently. And you're looking as far as US dollar index running the best part of, I think it's about 104.40, 104.30. I'm just looking there, and 150.75 for the yen. So keep a close eye on as far as where that's going to trend. And you've got to look at the other side, of course. The US dollar yen remains in upside tendency. Momentum in oscillators are mixed, and the next resistance levels are looking from that 151.30 to 152.30, Juliet. So that's where we're looking. That's where we're thinking that there's more legs up, and one can't take your mind off it as far as I think the momentum trade and what's going on from a psychological standpoint.
Well, speaking of a leg up, a great session on US markets overnight. The S&P 500 getting back to or near 6,000 points. What are the technicals showing us there? I know we've got a couple more 100 points to go.
Yeah, we're running, up 1.76%. It was very, very strong. And, your immediate resistance was 57.67, where you wouldn't believe it. That's where it stopped. when it closed this morning, 57.67. So that's the resistance. Can it break that? And I wouldn't be surprised that rally to continue. But again, I think the volatility is going to be the name of the game. You could be up a couple of hundred and then it could be washed out quickly with further comments from President Trump and the impact as far as April 2. You can't discount that at all. And, the overall stance, it seems to be softening his tariff stance, and it's gained some lost ground and attempting to reach that 20 and 200-day simple moving average. And don't forget, you've got the PMI data release.
All right, well, what we have tomorrow, or tonight, I should say, is our federal budget. But you're looking more in regards to how the Aussie's trading against the pound, Pete.
Yes, I am, because, when it's looking at it against the US dollar, it's really been a laggard considering the big breakouts that you've seen with the US dollar in the short run. So we've got to be conscious of that. And that up lead continues. We're thinking that, the bullish territory last unlocked in 2020, and prior to that, Juliet, it was 2015. Momentum indicators tick to the upside. The Aussie, it's pausing its upside momentum, currently hovering above the 20-day simple moving average. Yesterday's UK PMI manufacturing showed growth and momentum stalling, whereas Australia reported firm preliminary March PMI. So let's just see again where the Aussie moves and naturally where the pound trades. And you've got to also consider what's happening from a big picture as far as central bank policy, all of those sort of moving parts.
All right, and just a quick look as well when we're talking big picture of what we're seeing in Germany too, Pete.
Well, when you're thinking about it, it's been pretty solid. I mean, look at the chart. It really had a big breakout and it was really off to the races there. It's had a bit of a pullback and key support at that 22,713 sort of number. You've got IFO data being released today. Specifically, manufacturing improved in March while the services sector deteriorated unexpectedly. And that was according to PMI data, Juliet. So I think that the overall theme is you've had a big breakout and it's possibly a little bit of consolidation, and you might see it take a little bit of a sideways channel over the next week or two until we get a clear indication. And naturally, Germany plays a big part in this from a manufacturing hub and how their exports are going to be treated in the US from a tariff perspective, Juliet.
And just a question on the budget, Pete. I mean, I'm sure you'll be watching it tonight when the Treasurer hands it down. What sort of key focus should we be watching on when that's announced, given that the Treasurer, he said, he sort of had to Trump-proof the budget somewhat?
Yes, exactly. I mean, I saw his comments on Sunday when he spoke with Bloomberg, and he's certainly, the word that really, I think, hit everyone by surprise, where he's feeling that there's going to be pain on Main Street or concern with the US and all of these factors. So I don't think there's anything really to look at and closely. I mean, everything you've got to look at, because Australia needs its trading partners and what impact that has to their trading partners collectively. So I think it's just that supply chain and all of those all of that consumption chain that one needs to consider, like an export-driven economy like Australia is, Juliet.
All right, Pete. Thanks as always, Peter McGuire there from trading.com. That does it for this edition of The Trade. Be sure to join us next time.